Robinhood, the rise and fall, and rise, of a disruptive force. A multi-chapter investigative narrative. Part 1. The Promise of Democratization. Chapter 1. From Zero Commission to Millions, the Robinhood Genesis. The year is 2013. Vlad Tenev, a Bulgarian immigrant with a background in computer science from Stanford, and Baiju Bhatt, a finance whiz from the University of Illinois, are simmering with frustration. They witness firsthand the predatory practices of traditional brokerages, their exorbitant commissions bleeding dry the average investor. Their solution? A revolutionary app that would democratize finance for all, eliminating commission fees and making investing accessible to the masses. This was the genesis of Robinhood. Their stated mission, democratize finance for all, wasn't just a marketing slogan, it was a deeply held belief. Tenev and Bhatt, fueled by a desire to level the playing field in a system rigged against the everyday person, set about building a platform that was both user-friendly and incredibly disruptive. Early funding came from unlikely sources, including high-profile angel investors like Howard Lindzen, who famously received a pitch from Vlad in San Diego and became one of the first believers in Robinhood's vision. Their marketing strategy was ingenious. They targeted young, first-time investors, a demographic largely untouched by traditional brokerages. The app's intuitive, gamified interface was a key differentiator. Digital confetti showered the screen upon successful trades, turning the often intimidating world of investing into a fun, engaging experience. This gamification, while initially successful in driving user acquisition, would later prove to be a double-edged sword, as we will explore in detail. The results were phenomenal. Robinhood exploded onto the scene, attracting millions of users eager to participate in the market without the hefty fees imposed by established players. Early growth statistics paint a picture of unprecedented success. Millions of new accounts opened within the first few years, transforming Robinhood into a financial juggernaut. The pre-IPO stock price performance reflected this meteoric rise, foreshadowing the intense anticipation that would surround the company's eventual public offering. The initial hype surrounding Robinhood wasn't just about its innovative technology, it was a symbol of a new era in finance, one where the individual investor finally held a powerful position. Chapter 2. The App as a Game, Gamification and its Perilous Side. Robinhood's success was largely attributed to its gamified interface. The app wasn't just a trading platform, it was designed to feel like a game. Features like digital confetti and real-time stock performance updates, coupled with a user-friendly design, created an addictive experience that drew in millions of inexperienced investors. This gamification, however, created a significant ethical dilemma. The excitement and reward system, while effective in attracting users, inadvertently encouraged risk-taking behavior. The tragic story of Alex Kearns serves as a stark illustration of the perils of this gamification. The 20-year-old college student, after seeing a massive negative balance in his account due to what he believed was a complicated options trade gone wrong, took his own life. His death sparked a firestorm of public outrage and regulatory scrutiny, forcing Robinhood to confront the ethical implications of its design choices. Kearns's experience highlighted the critical need for robust customer service and educational resources for users who were new to the complexities of investing. While many viewed the app's design as a deliberate attempt to incentivize risky trades, Robinhood vehemently denied these allegations and responded by implementing significant changes to their platform and customer support mechanisms. These changes included better explanations of complex trading products, more prominent risk warnings, and improved customer service protocols designed to prevent similar tragedies. The impact of Alex Kearns' death reverberated throughout the financial world, raising crucial questions about the responsibility of fintech companies to protect their users. Part 2. The Cracks in the Facade. Chapter 3. Payment for Order Flow, the Hidden Cost of Free Trades. Robinhood's commission-free trading model was a brilliant marketing ploy, attracting millions. However, the question remained, how did they make money? The answer lay in a controversial practice known as payment for order flow, PFOF. Robinhood, like many other brokerage firms, sells its customers' trade orders to high-frequency trading, HFT, firms. These HFT firms, with their advanced algorithms and lightning-fast execution speeds, profit from the minuscule differences between the bid and ask prices of securities. In essence, Robinhood's free trades came at a cost, the potential for less than optimal execution of customer orders. This inherent conflict of interest generated significant criticism and regulatory scrutiny. Are Robinhood users truly receiving best execution on their trades, or are they unknowingly the product being sold to HFT firms? The SEC's investigations into Robinhood's PFOF practices ultimately resulted in tens of millions of dollars in fines, levied for misleading customers about the nature of their revenue model. These fines, while substantial, barely scratched the surface of the ethical and legal quagmire surrounding PFOF. The debate continues, with critics arguing that the practice undermines investor trust and benefits institutional players at the expense of retail traders. The practice itself, though legal, continues to be a source of controversy and a significant factor contributing to public distrust of Robinhood. Chapter 4. System Failures and Volatility, When the App Breaks Down. Robinhood's rapid growth outpaced its infrastructure development. During periods of high market volatility, particularly during the GameStop saga, as we'll explore further, the platform repeatedly experienced crippling outages. These system failures, locking countless traders out of their accounts during critical trading moments, exacerbated the negative perception of the company. The technical reasons behind these failures, often attributed to insufficient server capacity and inadequate risk management protocols, were laid bare in subsequent investigations. The regulatory consequences were substantial. The platform's inability to handle high trading volume during critical market events severely damaged investor confidence and raised serious concerns about the stability of the entire platform. The frequency of these outages undermined Robinhood's claim of providing seamless access to the financial markets and further fueled criticism of the company's practices. These failures, coupled with the controversial GameStop decision, severely damaged the company's reputation, impacting its public image and investor confidence. Part 3. The GameStop Saga and Beyond. Chapter 5. The Meme Stock Mania. A minute-by-minute account of the GameStop saga. The year is 2021. The world is witnessing the rise of meme stocks, driven largely by the coordinated efforts of retail investors on Reddit's r/wallstreetbets subreddit. GameStop, $GME, became the epicenter of this frenzy. Hedge funds, heavily shorting the stock, found themselves facing a coordinated buying spree by retail investors, driven by social media momentum and a collective desire to challenge the established financial order. Robinhood found itself at the heart of this unprecedented battle. At the height of the frenzy, the platform made the controversial decision to restrict the buying of GameStop and other meme stocks. This action triggered widespread accusations of market manipulation, with critics alleging that Robinhood buckled under pressure from institutional investors and hedge funds, prioritizing their interests over those of its own users. The argument was that Robinhood, facing margin calls from its clearinghouses due to the massive short squeeze on GameStop, chose to restrict buying to protect itself and its institutional partners. The ensuing fallout was intense. Congressional hearings were convened, investigations were launched, and the incident fueled further debate on market manipulation, the power of social media in shaping market dynamics, and the role of retail investors in challenging established financial power structures. The events surrounding the GameStop saga continue to be debated, analyzed, and dissected years later, with no easy answers or clear conclusions. Chapter 6. The IPO and the roller coaster. From hype to reality. The anticipation surrounding Robinhood's initial public offering, IPO, was palpable. The company, built on the premise of democratizing finance, was itself about to become a publicly traded entity. The early trading days following the IPO saw a roller coaster of price fluctuations, reflecting the market's uncertainty about Robinhood's long-term viability and the sustainability of its business model. The initial hype gave way to a period of intense volatility, as regulatory scrutiny, negative press stemming from the GameStop saga and PFOF controversies, and concerns about the company's profitability created a turbulent ride for investors. The subsequent stock performance revealed a complex narrative. The stock price fluctuated wildly, often mirroring the company's fluctuating fortunes and its ongoing battles with regulators. The transition from a disruptive startup to a stable, profitable, and trustworthy financial institution proved more challenging than initially envisioned. The company's trajectory highlighted the inherent difficulties of transforming a rapidly growing, albeit controversial, business into a sustainable, long-term player in the established financial landscape. Part 4. The Future of Robinhood. A New Chapter. Chapter 7. Expansion and Innovation. New Frontiers in Finance. Despite the controversies, Robinhood continues to evolve. Its expansion into new markets in Europe, accompanied by its bold foray into tokenization of assets, reveals a determined attempt to reinvent itself and address criticisms. The launch of banking services and prediction markets signal a push for diversification and the exploration of new revenue streams. The adoption of blockchain technology, its integration with cryptocurrencies, and its initiatives surrounding tokenized assets reflect an ambitious strategy to reshape the future of finance. The notes indicate impressive growth in various areas. New features are being deployed, including perpetual futures in the EU, with up to 3x leverage, and the tokenization of US stocks is underway. The company even gave away tokens representing ownership in SpaceX and OpenAI, though OpenAI publicly distanced itself from the offering. These developments, while promising, come with new challenges and potential risks. Chapter 8: Lessons Learned and the Path Forward. Democratization Revisited. Robinhood's journey, from its initial promise of democratizing finance to its turbulent years grappling with controversy, offers valuable lessons. The company's successes, its revolutionary approach to commission-free trading, its user-friendly interface, and its early adoption of innovative technologies, are undeniable. Yet, its failures, the ethical dilemmas surrounding gamification, the inherent conflict of interest within PFOF, the system failures during periods of high volatility, and the controversy surrounding the GameStop Saga, are equally important to analyze. The long-term viability of Robinhood's business model remains a subject of intense debate. The challenges of navigating the complexities of the financial regulatory landscape, maintaining investor trust in the face of criticism, and fostering responsible innovation will continue to shape the company's trajectory. The GameStop Saga served as a wake-up call, highlighting the tension between democratizing finance and safeguarding against market manipulation. The debate surrounding PFOF and gamification remains unresolved, with significant implications for the future of fintech and the regulation of financial markets. The story of Robinhood is far from over. Its future will depend on its ability to adapt, innovate responsibly, and build a business model that prioritizes both profitability and ethical conduct. The ultimate question remains: will Robinhood truly succeed in its original mission to democratize finance for all, or will its legacy be defined by its controversies? The final chapters are yet to be written.